Hello students, hope you are doing well, and I welcome you in this day 4, which is the final day of practice to pass webinar, which is being organized by ACCA for performance management for September 2022 session. And I am your trainer, your tutor Haris Hanif from Tabani's School of Accountancy, a Platinum ALP. This is day 4 and this is the final day, and we will try our level best to come to discuss the important areas, the most important areas, the CRQs, few MCQs. But before proceeding with this, will you people please confirm me that my voice, screen, video is all clear to all of you? Am I audible? My voice, my screen is all clear to all of you? Please reply me in the question box. Please reply here in the question box, all of you. My voice, screen, video is all clear to all of you? All right. All right, students. Yes. Now let's start with this final day of this webinar, and the handout is attached in the handouts section. And right now I am going to discuss with you people about the divisional performance. I am now going to discuss with you people about the divisional performance, and see it's the performance measurement area, right? And I have told you what I told you in the first class, when it was that it quite may be possible that you will be receiving either the question on divisional performance, either the question on value for money, either the question on building block model, or even transfer pricing. This and that topic cannot be predicted by anyone. This is basically what I'm now going to say, that performance measurement area worth approximately 20% in your exam, and your one case OTQ is examined from the costing area, which we had already discussed, right? So now I'm now going to discuss with this area, and this is the divisional performance. This is the divisional performance area, and I'm now going to discuss this thing, divisional performance. Now, what is the divisional performance? That suppose that you people are the head office and you are having divisions under you. All right. Now, head office, that is HO, head office, and head office is actually assessing the division. Head office is actually assessing the divisional performance. All right. Now, head office is actually assessing the divisional performance. Now, two important KPIs are actually used in order to assess the performance of that division. So here there are two important KPIs, for divisional performance. Two KPIs for the divisional performance, right? One is ROI and second one is RI. One is ROI and second one is RI. Now, what is ROI? ROI is actually the return on investment. Return on investment, and that is calculated as ROI is equal to, that is profit over capital multiply by 100. All right, profit over capital multiply by 100. And secondly, there is RI, which is calculated as PBIT, profit before interest and tax, and you have to deduct the notional interest. Now, what is actually the notional interest? Something there are many ways to explain notional interest, or we can say the imputed interest. Let's say for example, let's say for example that I have my own capital. I have my own capital, and there is obviously the opportunity cost attached with my investment. Now, I might be arguing that if I have the capital, who am I? I am the head office, and that head office is supplying, is giving the capital to the divisions. For example, if I would be arguing that I am having the capital, and the capital has its own opportunity cost. Let's say this may be invested in a bank for the return. So that is my cost. That is my cost. Or it quite may be possible that I have arranged this capital from different other sources, and I have to pay interest to them. So definitely there is the cost attached with the capital, which is known as the interest. So notional interest is actually the capital multiplied by the cost of capital, multiply by cost of capital percentage, and that you need to deduct it, and the resulting figure would known as residual income. And what is the residual income? Residual income is actually the profit before interest and tax less your notional interest, or you can say the capital. Now the point to be noted is that in both the figures we are having two common things. In both the KPIs we are having two common things. One is the profit, one is the capital. The profit and is the capital. And remember that this profit figure should be PBIT, that is profit before interest and tax, profit before interest and tax, or we can also call it like the operating profit. It should be before interest and tax, and it is the profit before interest and tax, and it is the operating profit. Yes, I am writing here the word operating profit. So it is the profit before interest and tax, and it is also known as the PBIT or the operating profit. The point to be noted is that head office is assessing the performance of the division. Head office is assessing the performance of the division, and there are two important KPIs. Notional cost, notional interest is actually capital multiplied by cost of capital. Every capital has its attached cost, whether I have borrowed the money from someone, or whether this is my own money, my own capital, and there is the opportunity cost attached. It quite may be possible that. So I can invest it elsewhere. So this is the imaginary or the notional cost. Now point to be noted is that this is the rule applied for the notional, is that this is the what if analysis. What if I might have borrowed this money from those capital employed, from the bank, from the ordinary shareholders and all that stuff. So what if, for example, there is $100,000 investment, and this is my own money. Now I am arguing that what if I might have been borrowed it from someone. If I might have borrowed it from someone, so there is the attached cost of capital. So cost of capital is actually the weighted average cost of capital by incorporating the various finance providers. All right, so after deducting that, what is the thing? So profit is this thing, and second one is the capital. Now if the capital figure is not given, so you can calculate it simply by total assets minus current liabilities, total assets minus current liabilities, or capital is equity plus non-current liabilities. Now point to be noted is that these are the formulas, and I will be writing something else, and I am noticing one or two students, I guess they are about to copy. So please just note it down. I'm giving you just few seconds. Note it down, hurry up. That's a very simple thing for you people to note it down. And this is something, the capital, or you can say the profit, capital and the profit. Now, point to be noted is that whatever the profit and capital figure is, whatever the profit and capital figure is, that is profit and capital, these both figures should be controllable by the division. One thing to be noted is that it quite may be possible that there are many aspects, there are many figures which are not controllable. There are many figures, quite may be possible that there are many figures which are not controllable by the division. So those figures should not be incorporated. Let's see, there is the inflation in the country. Is it my fault? Can I control this? Not at all. So it's uncontrollable for me. So you should not blame me for those factors over which I have no control. You people are the head office. You people are the head office, and you are assessing my performance. If you guys are the head office and you are assessing my performance, so you should take those figures, those aspects actually over which I have some control. All right. So profit and capital figures should be controllable by divisions. They should be controllable by the divisions. All those figures should be ignored that are not controllable by the division, right? Now, one important point to be noted is that there are two KPIs. There are two KPIs. Which KPI is good? The answer is obviously RI. If I can summarize you people in order to make you people understand, in both the formulas in ROI and RI, there are two things common. Number one is profit before interest and tax, and number two is the capital. Profit before interest and tax, and number two is the capital. In both the things, in both the things there are profit figure as well, and there are capital figure as well. And the profit figure, let's say for example, the profit figure, let's say for example, is the operating profit, right? It is the operating profit, and one operating profit is that over which I have some control. All right, over which I have some control. Second point to be noted is that capital is the same ROI and RI in both the cases. Capital figure is same. All right, but the point is that in RI there is one additional thing, which is the cost of capital. Now, because of the cost of capital, it is getting the edge over ROI. So RI is the better KPI. RI is the better KPI in order to assess the performance. All right, RI is the better KPI. Why? Because it considers the cost of capital, because it considers the investment kind of things. And ROI is purely inward looking. See, it is purely inward looking. Why inward looking? Because it looks only at the own performance. This KPI and the mindset is too much important. For example, you are giving me the target. And you are saying me that Mr. Haris Hanif, that you will be judged. You are saying it to me that you will be judged based on ROI. So my mindset would be that I have to report healthy ROI picture. All right, and for that I may ignore the interest of the notional. I may ignore the interest of the capital. It quite may be possible, because my performing mindset based on the target, would be that I have to report you the figure for which you will be happy. Who are you? You are the head office. For which you will be happy, considering the good ROI or the healthy ROI, right? So for that I am not considering the cost of capital. So this is purely inward looking, that is, they are not considering the interest of finance providers. But if you can look here at RI, it is saying that after profit before interest and tax, the notional interest should be deducted, right? The resulting figure is residual income. So they are actually the win-win approach. They are following the win-win approach. That is, after settling the interest of finance providers, what is the net benefit for me? What is the net benefit for me, right? Right? So you are getting the point. It quite may be possible you are getting the point. So point to be noted is that RI versus ROI. So the point is that RI is better. RI is better. RI is better over it. RI is better over ROI. Why? Because ROI, if I will be summarizing here, cost of capital, no, this considers. Interest of finance providers, this considers. Investment risk is that if I will be arranging the money from ordinary shareholder, from the bank, from the preference shareholders, all are having different kind of risk. ROI does not consider, this considers. You know what? Here it is, one thing I am writing it with the black color, that this cost of capital is actually the discount factor. This cost of capital is actually what? Discount factor. And if my discount factor is low, so that means my net present value would be high. Lower discount factor would increase the net present value, and similarly RI as well. So that means that this is the concept of time value of money. No consideration, RI does consider. All right. Now one point is that ROI is the inward looking. Win-win situation, that is considering the interest of finance providers. That is said to be goal congruent KPI. That is inward looking. That is dysfunctional behavior. Dysfunctional behavior means that you are totally focusing on yourself. That is the dysfunctional behavior. And remember that, and these are all the key points I am writing here, making a very good and prescribed summary. I hope you people are getting this point. So ROI is actually the short term, because when you are ignoring a lot of factors, that means your focus is only on the short term. If you are ignoring these factors, that means you are only focusing on the short term, whereas RI, residual income, considers all the aspects, and since it is the long term aspect, right? So RI is the long term KPI, ROI is the short term, and RI is the long term. I usually receive many of the students, they are struggling to answer why RI is better. So this is a very precise summary, very to the point summary, in order to make you people understand. First, give me the feedback on this summary. Do you understand this thing, that why RI is better than ROI? Please reply me in the question box. I've told you that feedback is a fuel. All of you. That's great. Now these are the reasons that why RI is assumed to be the better KPI. And so that if you are ignoring this kind of thing, and remember that for the dysfunctional behavior, you may take those decisions Manager may take decisions. Manager may take decisions which are only his favor and not in the company's favor, and not interested in the company's favor, right? So it quite may be possible that while receiving the ROI as the performing target, it may be possible that I may be focusing on the short termism. All right, so this is a prescribed summary that which KPI is better. Your answer should be RI is better. All right, so this is the summarized picture. Now let's move on to the question. This is the sports company from September December 2017. A very good question to practice for. And here I have attached at the last, that's advantages and drawbacks of ROI, advantages and drawbacks of sorry, RI, advantages and drawbacks, ROI, advantages and drawbacks. All right, but before going to start with this formal question, I am explaining that this is the question which is a mixture of calculation and theory. So I will be facilitating you for both the things, whether it is theory or whether it is the numerical question. I would be facilitating you for both. All right. First of all, I should make the spreadsheet file. You are aware of using the ACCA practice platform, right? So this is the sports company. All right, now let's move here on to this specific question. Let's read out the requirement. Let's read out the requirement first, then we will be moving ahead. Here it is written that this is division C and division E. Part A, part 1. Now here there is part A, calculate, part B, part 1, calculate, and so I will be solving this thing. I will be typing over here. I will be typing, and this is a spreadsheet. I will give the reference. This is, I will be using the spreadsheet. In a single spreadsheet, we will be solving both the requirements, right? So here there is the spreadsheet, and this is the explanation. Obviously, it will be typed, right? So remember that you will be receiving the same kind of window in your real exam. Don't you people have to worry about it. Number 1, part A, part 1. Calculate return on investment for each of the 2 divisions of a sports company. Return on investment. And for that, we need to go through the question. Now, this is the question here. Let's start reading the question. But before I am starting with this question, I want you people to read this case from here till here so that your reading skills can be improved. Please read this information with the thorough attention. Quite maybe possible that you have read this question. Now, here it is written that a sports company is a large manufacturing company specializing in the manufacture of wide range of sports clothing and equipment. The company has two divisions, C and E. Each division operates with little intervention from head office. Little intervention. That means head office is not getting involved or getting a little intervention. And divisional managers have autonomy to make the decision. And one thing to be noted is that the division is said to be the division when they have got the decisional making autonomy. All right, that will be called as the division. Now here it is written that sports company measures measures the performance of its division using ROI, that is return on investment, based on the controllable figures, controllable profit, and average divisional net assets. They are trying to say that take the average capital figure. It quite may be possible that there are opening capital, closing capital. Now which figure should be selected? It would be written in the company's accounting policy, and they have got the policy to use the average net assets. All right, average net assets. The target ROI for each of the division is 18%. If the division meet or exceed this target, the divisional managers would be receiving a bonus. Last year, an investment which was expected to meet ROI was rejected by one of the divisional managers. This is the very important paragraph for my next theoretical discussion. I am holding this paragraph for a minute, or you can say till we will be reaching towards that particular requirement. So I'm holding this paragraph. Since I know the insight, so you should need to follow me. Your operating statement for the year prepared by the company's trainee accountant is shown below. Obviously, when something is being provided by the trainee accountant, it needs to be adjusted. Why? Because he or she is not the expert person who had prepared this statement. This is being prepared by the trainee. This is division C and this is division E. These are the net profits. All right, these are the net profits. And one thing, we need controllable profits. We need what? We need the controllable profit. Now, so how do we know? How do we know that this is the controllable or uncontrollable profit? That we need to study the question. We need to study the question first. Controllable profit. All right. Now these are the figures. You might have noticed that these notes are very much important. These three notes. I'm just giving you 1 minute window to read this thing. One, 2 and 3. Please read it thoroughly. This is a very, very important information. Now, included in the fixed cost, included in the fixed cost are depreciation of 165,000 for 60,000 for division C and E respectively. 30% of the depreciation relates to the assets controlled but not owned. Ownership is not necessary by the head office. That means the important point is that the divisional manager is not having a control over it, right? The divisional manager is not having a control. Divisional manager is not controlling. You have to assess the performance of the division. You have to assess the performance of the division. It is not the figure which is controllable by the division. These are the depreciation which is controlled by the head office, all right, which is controlled by the head office. Now the point to be noted is that it is already included, all right. So we will have this cost, this cost this cost is already included, all right. This cost is already included actually. So here it is, this thing, sale revenue, variable cost, contribution, fixed cost, net profit. These are included in this cost which should not have been included. All right. Division C and division E. There are few costs which is included, which should not have been included. So I will have to add it back. I will have to add it back, right? So I'm here drawing this, the two columns here. That's for division C. Here it is division E. I'm just writing here 000 because we need to ignore the figures of 000. I'm writing the net profit figure because I have because I have to adjust these figures. The uncontrollable costs are deducted. I should not be burdenized for that uncontrollable cost. So it's the net profit I am writing over here, 1455, and here it is 3950. It's 3950. So this is my net profit. Now I have to make the adjustments. What I have to make the adjustments, you people can freely write, that is adding back uncontrollable costs. I am writing in order to answer to my examiner, my checker, that I know something. All right. So adding back uncontrollable cost. See that the cost which is already deducted, I am not in the position to control that cost. Why shall I be burdenized for that? The divisional manager would be demotivated. Divisional manager would be demotivated if divisional manager would be demotivated if he or she will be blamed for the costs which are not controllable by him or her. So this is adding back uncontrollable cost. And what is the cost here? There are two things to be adjusted. There are two things to be adjusted. One is the depreciation, and I am holding this information for the next discussion. It is 165 and 460. And writing here depreciation. All right, I'm writing here the depreciation. And what is the depreciation price is equal to? This is 165,000 multiplied by 30% and ignoring 3 zeros. So I will only be writing 165 into 0.3. So the answer is 49.5. It will be added back, and the divisional profit will be much more healthier. So 49.5, and next one is the 460. Price is equal to 460 multiplied by 0.3, right? It is added back. Now the next one is the head office. Head office recharge all of its cost to the two division. Head office recharge, that means who is earning, the head office or the division? The answer is obviously the division is earning, and head office needs some finance in order to meet their expenditure, and they are taking that expenditure from the from the divisions. So it is a head office, and see that this 620 and 700 are those costs which head office is recharging its cost to the divisions. Now these costs are under the control of the head office, not under the control of the management of the division. So that cost should not be, considered while reaching at the profit figure, right? So it's 620 and 700. It's 620 and 700. I'm writing here, that is head office costs. It's 620 and 700. So simply add it back and write here the word controllable profits by divisions. So you'll have to add it back. Price is equal to this cell plus this cell plus this cell. Press enter, got the answer. And this is the figure, the controllable profits by the divisions. And same goes for here. Price is equal to this 3950 plus 138 plus 700, got this amount 4788. All right. So this is the controllable profits by the divisions respectively. Now I need the capital figure, and the question is saying that above we need average divisional net assets. What average divisional net assets? It's average divisional net assets. Average divisional net assets. So here it is written that opening divisional controllable net assets, closing divisional controllable net assets, opening and closing. So these are the figures. I will have to add it back and divide it, add these two figures and divide by 2. So this is the opening net assets, closing net assets, total net assets, and average net assets. All right. So I'm just writing here all the things. That's what's the opening figure, 13,000. Closing figure, you can see that 13 and 9,000 for 24 and 30. 13 and 9,000, 24 and 30. So what is the total? Total is this cell plus this cell, that's total. That's the total thing. And what you are supposed to do, you are supposed to now divide these figures. That's average net assets. Price is equal to the above cell divided by 2. Because how do you calculate simple mean average? That is adding all the figures divided by the number of values. The above cell divided by 2. All right. So these are the controllable average net assets. Now these figures, I'm going to highlight these figures with a different color. That's red color probably. All right. So these are the figures I will be taking. These are the figures I will be taking for the in order to calculate the ROI and RI. So I'm writing here number one requirement, that is ROI, that is the return on investment. I need to calculate the return on investment. Now moving towards the question requirement, it is saying that calculate the return on investment ROI for each of the 2 divisions of sports company. All right. Now simply divide it. Price is equal to the profit divided by capital figure multiplied by 100. That's 19.314. Price is equal to divisional profit divided by average net assets multiplied by 100. That's 17.33. I had calculated my ROI percentage, and congratulations, we got 6 marks. Now I am turning the point for part B because it is of the same calculative area, right? Because it is the same calculative area. So it is calculate the residual income for each of the 2 divisions of sports company and briefly comment. All right, we will be commenting later on. First we need to calculate what? The RI, which is the residual income. And the residual income we need, for residual income we need cost of capital, and the cost of capital is 12%. Okay, now I'm just leaving 1 or 2 lines, that is RI, residual income. All right, and how do we calculate for the we will be calculating RI, that's the residual income. How do we calculate the residual income? We need to have RI, residual income, that is PBIT less notional interest and then RI. All right, that is we are having the residual income. Now that will be my final answer. For RI, that is PBIT is. Now the good thing for the spreadsheet is that you can simply add link the figures. You don't need to calculate once the thing is already calculated. You just need to link the cell. So here I am writing that's PBIT, press is equal to, go to the divisional profits, just link, no need to write, press enter. And the notional interest is basically the capital multiplied by cost of capital. What is the capital figure? That is 11,000. So I am writing here this 11,000 multiplied by 0.12. So it is being multiplied here. All right, because every calculation starts from is equal to. Then this is 1320. All right, now residual income is the above cell PBIT minus cell the notional interest. The answer is 804.5. PBIT, price is equal to and the the cell of the profit here, link down the cell and the answer. And then notional interest is this 27,000. This is the capital multiply by 0.12. Oh, sorry, this is a typing error. Price is equal to this capital multiply by 0.12. That's 3240. Price is equal to the above cell minus the lower cell. You got the answer. And now this is my answer. I'm doing it. I'm making the borders right here. No need to draw the borders. I'm just drawing it for myself. All right. Now these are the calculations I have done, and we have received the marks, whatever the marks are. All right. Now, what is the complete requirement? They are saying that calculate RI for each of the two divisions and briefly comment on the result of this performance measure. You only have to comment on the RI performance measure, and this is the same thing, the spreadsheet, and I will be typing right here. Now, please do tell me who is performing well, division C or E, only considering RI. Simple as that, they are performing well. They are performing well. This figure is being performed well. Considering the RI, this is performing well. That is division E. That is division E, right? 1548 is the residual income. And if I will be considered that residual income, so that means I might be writing that division E is performing well. Division E is performing well. That means division E has enough PBIT in order to settle the interest of finance provider. Hence, it is the goal congruent KPI. Goal congruent KPI, and it should be used for the long-term performance analysis. All right. So you should just write few lines. You should just write the few lines um, in order to address these RI calculated figure. And I'm going to write this thing. That is RI of division E is more than RI of division C, and that means that division E has enough profits, I mean PBIT, to settle the interest of finance providers, and this KPI is set to be the goal congruent KPI since it considers the interest of finance providers and the residual benefit for the company as well. And this KPI is also in line with time value of money concept. That is, low cost of capital means lower discount value, means low discount factor, means high NPV and high ROI. So this KPI should be used to analyze the performance. I'm just commenting on the results. I'm just commenting on the results of RI. So I am writing something in favor of RI, all right, because the question is demanding here. So as well as and this KPI is also in line with time value of money, and that lower cost of capital, or you can say discount factor, would increase both NPV and RI, and so it can be used to assess the performance of the division over a long time period. All right, that is a very simple thing. So RI is the residual income, and I have written something because the question had asked me to comment on the things. All right. All right, Nidusha Sekar, I will be repeating that thing, your concerns of profitability once again. All right, now let's move ahead for the adjustment. See that the adjustment I am showing, I'm adding this back. Why? Because this cost which I have added, first of all, Nidusha, please do tell me, do you understand at least how this cost was calculated? Nidusha, will you please type here, do you understand how this figure was actually calculated? And the concept behind that I will be repeating. But first tell me, do you understand this calculation? Oh, all right, that's good, that's good. Now, what is the logic behind adding it back? See that if this cost will be charged in my accounts, I am the division and you are the head office. If this cost will be charged in my accounts, my profit will be lower. Agreed? Now, these are the costs. They are included already. They are included. Why these costs are deducted from to reach at my profit? Why? I have got no control over these costs. So I am adding it back to increase my profit. All right, because now that profit is in my control. Nidusha Sekar, your feedback on this, do you understand? That's good. We have completed our calculative area. Now let's move ahead for the part 2. Part 2, I'm removing all the annotations here. No, I'm not removing. It should be saved here. Wait, please. All right, but I will be using different color. Discuss the performance of two divisions for the year, including the main reason why their ROI results differ from each other. Explain the impacts. You have to explain the impacts. You have to explain the impacts. You have to explain the impacts on it. You have to explain the impact on it on the behavior of the manager of the worst performing division. Please read this requirement at your pace once again. And now for that, the information which I put on hold, I am now going to resume this from this paragraph, right? Because I did not read it. Last year, an investment which was expected to meet the target ROI was rejected by one of the divisional manager. First of all, see that I'm now going to write one thing. That's very important note I'm writing here. ROI is equal to profit over capital. All right, that's multiplied by 100. That's obviously. If division wants to increase ROI, there are two reasons. There are two reasons. Sorry, there are two ways. There are two ways. If division want to increase ROI, there are two ways. Number one, either to increase this numerator, that is profit to be overstate, I mean increase, and capital should be reduced. Why? Because when the capital base is shrinked, now your ROI would be increasing. This is a very simple mathematical game. When capital is reduced and your profit is increased. Now imagine if you are giving me the target, you're welcome student, you're welcome. Now if you are giving me the target that I should be focusing on to maximizing the ROI, I will prefer two things. Number one, everything which will increase my profit and everything which will reduce my capital base. If you are giving me the target that giving the target to someone is actually giving the mindset to someone. For example, if I'm giving you the target that increase the profit, you would be in search of ways to increase the profit. If I will be giving you the target to reduce the customer complaints, so you will be in search of the good quality of the product, right? That good quality of product will lower down the complaint rate. Now, giving the target to someone is actually giving the mindset to perform. Remember these words. These are very golden words I am repeating. Giving the target to someone is actually giving the mindset to someone to think accordingly. If you are giving me the target, if you people are giving me the target to maximize ROI, I will be focusing on two things. Everything which is likely to increase the profit, everything which is likely to increase the profit, and everything which is likely to lower down the capital base. All right, so I will have to focus on these two things, whether they are possible or not. Let's discuss this thing. All right, so if division wants to increase ROI, there are two possible ways: profit increase and capital reduced. Now let's move on to the the question again. One of the it was rejected by one of the divisional manager. Why the investment? You know why the investment is getting rejected? Because of fear of reducing ROI. So an investment which was expected to meet the target was rejected by one of the divisional managers because it would have reduced the divisional overall ROI. Consequently, a sports company is considering the introduction of a new performance measure, that is residual income, in order to discourage this dysfunctional behavior. Because if you are giving me the ROI target, you are giving me the mindset to think of my own. You are giving me the target to think of my own. That's a dysfunctional behavior. So the point to be noted is that in the future, like another stuff, okay. And this information, which I also put on hold to read it now. Division E invested 2 million. Division E invested 2 million. And if you will be referring to this, ROI is lower of division E. It's division E and it's division C. So division E made the capital investment. Division E is making the capital investment. That is why its ROI is lower. All right. Now the point to be noted is that, which is included, division C, which uses a straight line method, made no significant additions to the non-current asset. No significant addition. Division C has got the mindset to report the healthy ROI. And division E uses the reducing balance method. All right, now the point to be noted is that, let's start typing this answer. That's part B, a very, very important part because it will improve your drafting style. And I will be typing it accordingly. Most of the students in sitting here might know me previously that when I will be explaining the theory, I first explain it with the numerical figures, then I will be typing it. All right. The point to be noted is that from here I will start typing my answer. All right. Now the point here is that is division C and that is division E. Division E. That's ROI is great and its ROI is lower. That's investment, no. Investment 2 million. Obviously, its ROI would be lower. And the depreciation. The depreciation is a straight line. The depreciation is reducing balance. Now, what is the impact on the depreciation? So that means here the depreciation is same in all years because it's a straight line. Straight line. Here, and you know the concept of depreciation on based on the reducing balance, that at the first year depreciation figure is high. At the first year depreciation figure is high, large depreciation, slowly reducing down. So this is the initial year. This is the first year. This is the 2 million during the year. During the year, and high depreciation at the start. Higher depreciation at the start. Higher depreciation at the starting figure of this. All right. Now it is the higher depreciation, and now higher depreciation figure would be that higher depreciation figure would be that it would be reducing your cap. It would be reducing your profit. It would be reducing your profit figure, right? Higher depreciation would be reducing your profit figure. Higher depreciation would be reducing your profit figure, right? All right. Now it's the a higher depreciation figure. It's a higher depreciation figure. Now that is the reason that in division E, that is the reason that in division E, these are the differentiating points. Now see that discuss the performance of the two divisions, including the main reasons why ROI results differ from each other. Why ROI differ from each other? These are the reasons. And see that this division, this particular division E is making the investment, and this division is thinking for long term. This division is thinking for long term. If their efforts, if this investment is ignored, then they might be demotivated. They might be what? Demotivated, and it quite may be possible that demotivated staff would result in operational efficiency. They would be impacting to your operational efficiency. They would be impacting to the operational efficiency. All right. So do you people understand that? If you people want to note this thing, please note it down. If you people want to note this thing, note it down, and then I will be typing this answer. I will be typing this answer. Please note it down. All right, now I'm typing this answer. Do you people understand this thing? Will you people please reply me in the question box? Yes, Isha, it would be mentioned, Isha. Now let's start typing the answer. And why I had written down the impact on the demotivation, because it is asking me for that. Explain the impact on the, could have on the behavior of the manager, could have of the behavior of the manager, could have impact on the behavior of the manager. And so I will have to type this answer accordingly. All right, now I am typing this answer. That is ROI of both the, first of all, always start your theory with the slight introduction. Always ask your theory with the slight introduction, right? Ask your theory with a slight introduction that I'm writing here. I am writing here that ROI is the measure of performance. This is the acceptable measure, but ROI is actually the acceptable measure, right? So I'm typing my answer here. ROI is the acceptable measure to assess the performance of the divisions and from the available information and calculated ROI, comma, division E is underperforming as it has not met the target ROI. And if you can see that, what is the target ROI? The target ROI is of 18%, and division C is having 19% target ROI. It's not meaning the target ROI of 18%, whereas ROI of division C has exceeded the target of 18%. And from this calculative analysis, the performance of division C is better than division E, obviously, and so qualifies for the bonus. You know, my answer is incomplete because the question is expressly saying me you must need to describe the reasons. Listen, you must need to describe the reasons. That what are the reasons? The reasons I have noted above, I will have to translate into simple English. All right, the main reason behind that, the different ROI is that division C has rejected the capital investment, and see that when there is a need of a capital investment, you should invest in your capital, because it's a long-term psychology, it's a long-term psychological thinking process. And so that division C has rejected the capital investment. Probably would be the probably with the intention to report the high ROI. And division E has made the capital investment of $2 million. Division E had made the capital investment of $2 million. Had made the capital investment of $2 million. All right, which would lower down the ROI. And in addition, division C was using straight line depreciation method, which has the constant depreciation, and division E is using the reducing balance method. Division E is using the reducing balance method, which has charged high depreciation in the initial year, which is the current year, and so reducing the profitability. I am writing the answer as if you should write, you are writing in the exam, right? So catch these words, try to learn that drafting style, that's too much important. Appreciate it, the efforts which I am making, and learn the drafting style, all right, which is the current year, and so reducing the profitability. These are the main reasons. Now, what may be the impact on the behavior of the manager? So, and you know why there is a capital expenditure being made? The capital expenditure is being made for the long-term survival, for the long-term success. And division C is not making the capital expenditure. That means division C is only focusing to maximize their own divisional ROI. All right, division C is only maximizing their own ROI, and they are not intending. To increase to increase the capital investment for the long-term survival. They are having the short-termism, right? So making the investment means to focus on the long-term survival, which division C may not be thinking, since it rejected the capital investment. And so focusing to maximize the ROI in the short term, whereas division E, whereas division E is focusing on the capital investment, all right. And when the capital investment is being made, that's only the long-term thinking. So if this efforts of division E would be ignored, division E would be demotivated, and the demotivated division manager would maybe the reason for the underperforming in the future. When you are supposed to write something adverse, you should focus for the future. If I am demotivated right now, in future I may not be performing well as if I'm performing right now. So this is the thing. All right. So this is the impact on the behavior of the thing. Whereas division E has made the capital investment $2 million for the long-term survival. And effort if this effort of division E would be ignored by the head office, division E would be ignored by the head office, then it may bring the negative impacts on the behavior of the divisional manager and may be demotivated, and it may affect the existing as well as future operations negatively, and ultimately the performance may be deteriorated. The performance may be deteriorated. This is the end of this answer. Before giving you the break, can I receive the feedback? Is it something understandable? Is your concepts are clear now? Thank you so much, Osama Rashid, for your valued feedback. Did you understand this thing? All of the students, please reply in the chat box. You know, feedback is the fuel. Do you understand? Thank you, Osama. Okay, Lamin, it's good. Shozib, thank you so much for your valued feedback. Mr. Prasad, did you join late or you were with us right from the start? Okay, Fan Wang Soon, thank you so much. Now, students, we have to start. That could be the reason that you are not getting the point because you joined late. Don't you worry about this thing. Watch this recorded video when it will be available on ACCA Pakistan YouTube channel. Now, let's take a short break, and here it's a pray time as well, and I am giving you a few minutes break. It's 6:20 at my side right now, so we will be back on approximately that's 15 to 20 minutes break, and after this break we will be starting the new topic. All right, it's 6:20. I will be resuming at 6:35, or you can say 6:40 around PM PST. Do not disconnect. I am just turning off my mic and my video. See you after the break. Students, we are now back from the break. Can you please tell me whether my voice, screen, video is all clear? Am I audible? My screen, my video is all clear? Please tell me once again. All right, so I'm now proceeding this webinar, and I hope that you all are in my WhatsApp group, and in that group I had created the link I have placed in the description. I'm assuming that you all are here in the WhatsApp group. And now for this part B, sorry, part B, part 2, explain advantages and disadvantages. Explain advantages and disadvantages using the residual income to measure the performance. Advantages and disadvantages of residual income to measure the performance. It is actually here in this handout on the next page. The advantages and disadvantages of residual income to measure the divisional performance. You can simply go down and you can simply read out the advantages and drawbacks, right? So this is already given. This is for the knowledge based purpose. This is the knowledge based stuff. And so I have attached my theoretical portion over there. All right. Now, students, I'm now doing exit from this capital and cost of capital area. I'm now moving from this capital and that cost of capital area, the return on investment and all that stuff. These are the results I usually share with my students to this part only for your motivation, right? Now that I'm now going to open the topic transfer pricing. I'm just closing these windows. These files will be shared with you. The topic is of transfer pricing. Yet this is one another important topic of transfer pricing, and many of the students are struggling with this with this topic as well. Now let's move on to the topic transfer pricing. What is actually the transfer price? The handout is already attached here in this handout section. The handout is attached here in this handout section of transfer pricing. You can download it. Now, now let's start with this topic, transfer pricing. And I'm touching this area. Why? Because it's one of the important area. All right, this is one of the important area. Transfer pricing. Now, what is this transfer pricing? Let's say this is the HO, I mean head office. This is the head office. There are two divisions, that is division 1 and that is division 2, right? That is division 1 and that is division 2. These are actually two divisions under the head office. They both are required to report to the head office, right? And let's say, for example, that division 2 is the division which needs the raw material which is being produced by division 1. Division 2 needs the raw material, or division 2 needs the component or the product which is being developed by division 1. So division 2 has got two options. There is straightforward two options. Division 2 has got straightforward two options, that either to purchase this raw material or the product from outside the family, I mean outside the group. For example, that I am division 2, right? Me, Haris Anif is the division 2 and you are division 1, and we both belong to the same group. We both belong to the same group. All right, we both belong to the same group, and you are selling this product. You are selling this product, and I also need product. Let's say, for example, that you are processing the thread from cotton to thread, cotton to thread. You are producing, and I am the division, I am the cloth manufacturer, and in order to manufacture for my production, I need the threads. I need the threads, right? So I have got two options: either to purchase the thread from you. Will you give me at zero price, at a nil consideration? The answer would be 100% no. You will be saying to me, not at all right? So when I will be purchasing the thread from you, you will definitely charging me a price, because everything has got the price, right? So you will be charging this thing, charging in the amount, all right? And I've got two options: either to purchase the thread from you or to purchase it from outside supplier. So I am having two options. If I will be purchasing from you, you will not be giving me this product at a nil consideration. You will be charging me something, and that price is the transfer price. All right. And that price is the transfer price. And simple is that, let's say that this is the buyer division and this is the seller division. They both are required to report to head office. They both are required to report to the head office, all right? So when the organization is managed in a divisional manner, then there may be transaction within the divisions. Transfer price, this is the selling price, at which one division sells the goods to another division, at which one division sells the goods to another division. And point to be noted is that the transfer price, now should just give me the answer in question box, yes or no. Should head office involve in setting the transfer price? Should head office set the transfer price, or let the division decide it by themselves? Will you people please write on the question box? The answer is no, because it is the division, and division is said to be the division when they got the opportunity to take the decision for their own division. That is the decentralized authority, or you can say the decision making autonomy is giving to the divisions. All right. Now point to be noted is that transfer price should be set in a manner so that both divisions should be in profit. I'm using the shortcut PP, transfer price. PP set in a manner that both divisions should be in profit. That is, you can say, ultimately whole group. Ultimately what? Ultimately whole group. Sorry. Ultimately the whole group, right? So the point is that that is the goal congruence. The transfer price should be set either yes or no. It quite may be possible there may be the scenarios that in some circumstances, I may not set the transfer price, or you are not supposed to sell this product to me, because in the market it is available at low rates. So I will not be purchasing it from you. I will be purchasing it directly from the market. All right. So there may be the consequences. Now everything based on the consequences. Everything will be based on the consequences. That is retained divisional autonomy. Now, what do you mean by the term divisional autonomy? That is, what do you mean by the term divisional autonomy? The divisional autonomy is that head office should not get involved while setting the transfer price. This decision making power should be given to the divisions. All right, so these are the purposes, you can say, of transfer pricing. So while you are setting the transfer price, you should consider both divisions in mind, the seller division and the buyer division as well. And if both the divisions will be in profit, ultimately the whole group. Imagine you and me belongs to the same group. We are in a same family. If I am purchasing this product from you, or if this product I am purchasing from the outside market, something strange supplier, so he is charging me the profit, he is charging me the cost to me, profit to him. So what's wrong with that? Why cannot I purchase it from you, my family member? So that, for example, I'm going to write a very important line. Observe this. I need this product. I'm purchasing it from outside supplier. I'm purchasing it from the outside supplier. From the outside supplier, I'm purchasing it from the outside supplier. He is charging me the amount. He is earning the profit from me. If I will be purchasing this from you, that's my relative, for example. Take me as a family member. So that profit will be retained in the group. Profit will be retained in the group, and that is the utmost objective. Retained profit in the group. So you can say these are the goals of transfer pricing. These are the goals of transfer pricing. All right. So if you people want to note, you can. This statement is actually mean that profit should be retained in the group. All right. So this is the point of retaining the profit in the group ultimately. Now let's move ahead. Setting the transfer prices. There are minimum transfer price and the maximum transfer price. Now the minimum transfer price is that the minimum transfer price which seller division will charge to the buying division, which seller division will charge to the buying division. This is the minimum transfer price. Minimum, that means at least, which seller division will charge to the buying division. How to calculate the minimum transfer price? That is TP. Let's say for example the seller division is that let's say there is a seller division and there is some cost which is known as related cost to transfer. So you will be having relevant cost, it's relevant cost to transfer the goods to division. Plus opportunity cost. Now what is this opportunity cost? What is the opportunity cost? Opportunity cost is actually if a big if. Let's imagine, the basic is too much important for this transfer pricing, right? Let's say I am coming to you, I'm coming at your doorstep. Treat me as a customer, all right? No matter that I belong to the same division, but you should treat me as a customer since I am your customer. You are not giving me at a nil consideration, you are charging me the money. So you are a seller and I'm the buyer, all right? I am coming at your doorstep, all right? So I am asking for this product. And you are thinking that if this product will be supplied to me, Haris, the buying division, the buyer division, you will lose your external sales. you will lose your external sales, and your external sales are your external sales are your external sales are what is your external sales? Your external sales are that if you are losing, if you are losing the sale from the external customer, because you are also managing and handling your external sales, external customers. So if you people are losing the external customers, obviously there would be the lost contribution. So you will be receiving it from me. All right, so you will be receiving it from me if you will be losing the external sales. So you will be receiving this money from me. That is because of me. This is the special decision making, right? This is the special decision making, and you should consider this lost opportunity if 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 all right, if because of selling this product to me, because of selling this product to me because of selling this product to me, your external sales are getting lost. So definitely your contribution would be lost. Your contribution would be lost, right? Your contribution would be lost. It's very simple thing. It's very simple thing. So you should need to go for the charging this thing. That's opportunity cost. If all right, student, I am just silent for a minute because here the azan is going on. Just 1 minute I am silent, then I will be proceeding. You people can note it down. All right, students, now I am resuming this thing. that is necessary cost to transfer. Obviously, the necessary cost to transfer, you will be charging me that this is the at least amount. Plus, in addition, if you are losing the contribution from external sales in order to sell it to me, the division 2, then you will be added. And opportunity cost is the lost contribution. All right. So if external sales are lost because of transferring to the division, this is actually the minimum transfer price. Now, this is the minimum transfer price which seller division will charge. All right. Number 2. What's the maximum transfer price? The maximum transfer price is which buyer division is ready to pay. Now, I am the buyer. I am also aware about the market rates, demand, supply. I am the buyer. I'm not a kid. I am receiving the quotations from external market. Now, the maximum transfer price which buyer division is ready to pay is the market rate, because it is the market rate at which I am willing to pay. I will not be paying you more than the market rates. All right. I will not be paying you more than the market rates. I will not be paying you more than the market rates. All right. So this is basically the maximum transfer price which buyer division is ready to pay. This is the question. What should be the transfer price based on opportunity cost? I mean, what should be the transfer price? That at least it is the minimum transfer price. I mean, which the seller will be quoting. Take 1 minute. Just try this question. Solve this question. Hurry up. This is a small question. You people can solve it. But at least try this question to solve. Is there any answer? I must open my question box here. Obviously, Mr. Nawal Mushtaq, it is a market rate, or whichever the price is lower. For example, at market rate, it is expensive. So definitely I will be purchasing it from you. Obviously, this is a market rate, which is a maximum. And if seller quoted price, if seller division quoted price is low. Now, I did not write because it's a decision making, it's a rational thinking. All right. So lower one would be the maximum price. All right. Now, please carry on with this question. All right, now I'm going to solve this question here. Here it is written that ABC Limited has two divisions, D1 which sells internally as well as to the external market. The variable production cost is 29, variable selling overhead is 5, fixed production overhead is $3. And see that fixed production overhead is irrelevant for the decision making. Fixed production overhead is irrelevant for the decision making. The standard selling price which D1 charges is 78 per unit for both internal and external sales. Now see that if you are supposed to calculate the transfer price based on the opportunity cost, you must need to calculate the opportunity cost first. So I'm just writing here, what's your current status? What's your current status? Filling performance measurement, that's your current status. Current status of division 1 is the contribution. Contribution is 78 minus, that is selling price, minus all variable costs, whether it should be production or non-production, it should be the variable cost. It should be the variable cost, whether it is the production or non-production. All right, so now here is that the variable production cost is 29 minus $5 is the variable selling overheads. Now I am deducting this 5. This is 5, right? So what is the current contribution? That's 78 minus 29 minus 5. This is $44 per unit. And if you will be selling this product to me, your contribution would be lost. This is the contribution which you are earning. This is the contribution which you are earning from external sales. All right, you are earning this contribution from external sales. Good, you have computed this. Now I am going to calculate the transfer price. What is the transfer price? That is minimum. I mean, at least what should be the transfer price? You know, I had written the formula in the above here, in the above page. The relevant cost for transfer and the opportunity cost, which is the loss contribution. That is the relevant cost to transfer. Plus opportunity cost. And the opportunity cost is 44. This is the opportunity cost. This is the cost for you. If you will be selling this product to me, you will be losing the external sales. Now it is written that, now see, students, fixed cost is not relevant for the decision making. Whether you sell it to me, whether you don't sell it to me, this fixed cost would be incurred anyway, anyhow, because it's a fixed overhead, right? So it is the variable production cost that is relevant. So I will be writing the relevant cost, that is 29, plus it is written that 20% selling overheads will be charged if division 1 sells internally. Selling overheads, what is the selling overheads? That is $5. That is $5 is the selling overhead, right? $5 is the selling overhead. And here $5 is the selling overhead, and its 20% will be charged. Its 20% will be charged, and it's a relevant cost to transfer. All right, it's $25. It's $1. It would become $1. So this thing plus this thing, the collective transfer price is 30 plus 44. It is 74 per unit. This is the minimum transfer price. When I will be coming to you, see, observe my body language as well. I am your customer. I am your customer. I'm your customer. And if I will be coming to you, if I will be coming to you, you will be charging me. You will be asking me. You will be asking me. You will be asking me the price. All right. You will be asking me the price. This is 74. No, when I will be coming to you, you will be asking me $76, and I will be negotiating with you, and I will be negotiating with you, and you will be charging me at least 74, not below this, because you will be having the loss. You will be having the loss if you go down by this rate. All right. So this is the minimum transfer price. Students, do you understand this thing? Do you understand this thing? Hello, students, reply me here. Great. Now, let's move ahead. This is the question, and a very good question. This is not only the question, this is a very good question, I must say. It's a very good question. Now, here it is written that, sorry, yes, it is written that using an opportunity cost to transfer pricing, what is the minimum transfer price? Opportunity cost principle would be used. Parent company has two divisions, A and B. Parent has a limited skill labor. This is the limited skill labor. Point to be noted right here. It is the limited skill labor. It's a very important point to note. Very important point to note. Operating at full capacity, making product Y. Full capacity means busy in earning. So you are busy in earning from product Y. So you must need to calculate the contribution immediately from product Y. You are busy in earning from product Y, and fixed cost C, it's not relevant, and immediately calculate the contribution from Y, that is 600 minus 200 minus 80. So that means you are currently earning 600 minus 200 minus 80, that is 320 per unit. 320 per unit. You are currently busy in earning from product Y $320 per unit. I mean, it is the contribution figure. It's the contribution figure. All right. It has been asked. It has been asked to supply a different product X to division B. You people are the selling division. Assume yourself that you guys are the selling, you are a seller division, you are a selling division. You are earning $320 from product Y, and I am asking you to leave product Y and produce product X for me. And I am asking you to leave product Y, leave your current earning, manufacture product X for me. So that means the cost of X would be charged, the cost of X would be charged, and opportunity cost of Y. Cost of X and opportunity cost of Y. All right, now the version B currently sources this externally for 700. This is something irrelevant for me right now. The same material and labor, it's being used. The cost cards for each product are shown below. That's product Y. Using an opportunity cost approach to transfer pricing, what is the minimum transfer price? Giving you 1 or 2 minute window to solve this question. I'm waiting here right in front of you. Please try to solve this question. Let's try this question, whether you are able to handle this question, since I am assuming this as a challenging question. Please read this question carefully and try to solve. Naval Mushtaq, your answer is could be right if certain information might not be available. It's actually the wrong answer which you had written. No, Nidusha Sekar, it's not the correct answer. Isha Budani, your answer is right. I'm not going to disclose the answer. I will be solving the answer. Okay, I'm not solving this question. See that in this question, there would be cost of X plus opportunity cost of Y, right? So few of the students would be calculating like that way. That's the cost of X, that is 150 plus 120 plus opportunity cost is 320. The answer would be 590. Absolutely cross. It's not the right answer. It's not the right answer. I'm doing it a big cross. Okay, this is the wrong answer which you have calculated. No. Now observe and listen it very carefully. If this information would not be given, assuming that this information is not given, then this answer is right. But the example, the question is stating limited skill labor. That means it's a limiting factor. It's a limiting factor, right? And whenever there is the limiting factor, whenever there is the limiting factor, you must need to calculate the contribution per limiting factor, which is in case the labor hour, limited skill labor capacity. Now limited hours, I am now going to write the hours for Y and for X. For Y, it's a direct labor cost. For Y, it is a direct labor cost of 80. All right, direct labor cost of 80 and per hour is $20. So 80 over 20. So you will be having 4 hours. You will be having 4 hours, right? And here it's 120 over 20. That means it is for 6 hours. All right. Now, whenever there is a limiting factor, whenever there is a limiting factor, you need to measure the limiting factor per labor hour. When there is a limiting factor, when there is the limiting factor, then contribution per unit because then there is a contribution per limiting factor. When there is a limiting factor, then you need to calculate the contribution per limiting factor. Then you need to calculate the contribution per limiting factor, right? Now, I am earning the contribution from Y. I am earning the contribution from Y, and Y is being made in 4 hours. So your current opportunity is being measured like that way. That's current contribution from Y. That is 320 per 4 hours. So that means 80 per hour. So that is the current earning. Current earning of division. All right. You know why I've calculated this? Just because of one word, that is the limited skill labor. And whenever there is a scarce resource, whenever there is a limiting factor, you need to measure your contribution per limiting factor, right? So you are earning the contribution in 1 hour. Remember that in 1 hour you are earning the contribution for 80. And in order to make X, we need 6 hours. In order to make X, and in order to make X, we need 6 hours. We need how many hours? 6 hours. So if you are earning $80 in 1 hour, for me to produce product X, you have to sacrifice your 6 hours. So opportunity cost will be on 6 hours. All right. So my relevant cost would be that is cost of X. The cost was absolutely right. That is 120 plus 150 plus 120 plus opportunity cost for Y. That is 80 multiplied by 6 hours, and that would be the final answer. So you know that the complexity of the question. Intentionally, the option was there of the wrong answer. You need to be alert. You need to focus on the information which is available in the question. You need to focus on that very critically. So it's 80 multiplied by 60. That is, sorry, multiplied by 6 plus 150 plus 120. The answer is 750 is the minimum transfer price. It's the minimum transfer price. It's the minimum transfer price, right? That's C. Sorry, it's B. So 1 or 2 students had gave this answer, and yes, it is one of the complex calculation. I hope that this calculation is now clear to you people. isn't it? Leave a response here, please. Good. Okay, now turning to another question, and I'm not going to read this question. Seriously, I'm not going to read this question. Giving you 1 minute time to solve. Just solve this question. A very important question. Seriously, a very important question. Solve this question, please. Okay, I have noted your answer, Fan Wang Soon. Try to solve this question as soon as possible. All right, now receiving the options, that means you people can solve it. Now let's try the solution for it. Ox, no, first of all, reading the requirement. If division B accept the cold company offer, what would be the impact on the profit per year for the group as a whole? For the group as a whole. Ox company has two divisions, A and B. Division A makes a component for air conditioning units, which it can only sell, which it can only sell to division B, which it can only sell to division B, which it can only sell to division B. That is a plus point. It has no other outlets for sell. It's only being sold to the division B. That means this division is actually there in order to sell internally, right? So this is the transfer price 165. 165 is the transfer price currently, right? This is the transfer price currently. Marginal cost, whatever. Cold company has offered to sell the component for 140. Now see that current transfer price is 165. Let's say, for example, take it as an imagination that you guys are the seller division and I am Haris Samif, your internal buying division. All right. You are selling this product to me. You are selling this product to me at 165. You are selling this product to me at 165. This is the selling price. You are selling this product to me at 165. All right. Now, you are selling this product 165 and I got the offer at 140. Obviously, I will be purchasing outside. Obviously, I will be purchasing outside. So your division may be shut down. It is written here. If division B will accept this offer, division A will be shut down because you are solely relying on me. I'm your only customer. So your whole division will be shut down. So you need to tell to what will be the impact, if because it's a divisional autonomy, it's up to my discretion whether I will be purchasing it from you, whether I will be purchasing it from the market. It's my discretion. Nobody can raise an argument on it because it's the division, it's the divisional performance. I have got the valid offer. Now it's now your task that how to handle me. All right. So if now imagine what would be the impact if I will be going outside, if I will be going outside to purchase from here, from this customer, from this customer, from this sorry, from this supplier. If I will be going out to purchase from this supplier, the profit will be going out from the group. The profit will be going out. The profit will be going out from the group, and I will be saving the cost. At 165, I am purchasing it from you, and the supplier is ready to give me at $140. So I will be purchasing it at $140. So $25 is being saved from my side, and your division will shut down. So you need to take the impact for the collective group, So here is that if buyer will purchase from the market, then there will be loss to division A. There will be loss to division A, I mean the seller. There will be benefit to division B, that is buyer. And there is the benefit or loss to the group. So you need to follow these analysis. There's a what if analysis. All right. So this is 165 and marginal cost. This is your division, right? Division A. So what's the current profit? Current profit of division A, I mean the seller, is 165 minus 100. 165 is the TP transfer price. This is the cost. How many units are there? There are 2200 units, and there is a specific fixed cost for $10,000. 2200 units, right? Yes, there are 2200 units. There are 2200 units. Minus fixed cost, that is 10,000. So what is the current profit you are earning? 165 minus 100 into 2200 minus 10,000. That is 133,000. 133,000. That is the current profit of division A, right? If I will be going out, your division will be shut down with the loss of 133,000 which you are currently earning. So if buyer will go out, if buyer division, that is B, will purchase from outside supplier, then there will be loss to division A. What is the loss? This would be the loss. All right. And I will be having the benefit because right now I am purchasing it at 165. Now I will be purchasing at 140. I will be saving 25,000. Sorry, 25 into 2200. I will be saving 55,000. I will be saving 55,000, right? So that is the benefit to buyer. You know what is the benefit? That is 165 minus uh, what's offer? Yes, 140. I will be saving this amount at 2200 units. That is 55,000. So you know what? Ultimately, what would be the impact? What would be the impact to the group if I will be going out? That is 78,000 loss to the group. And you know that this is not the goal congruent decision, right? Because at the very first page of this presentation, I have told you that the ultimate goal of the transfer price is that it is written right here. This is the retained profit in the group and the goal congruence. Both divisions should be in profit, right? And considering this calculation, now what you should do? The answer would surely be B. That is the B is the answer. But as far as the concepts are concerned, now my bargaining position is high. I am at the high bargaining position since I got the offer at 140. So if I will be going out, let's assume that if I will be going out, your division will be shut down. The group will be having a loss of $78,000. All right. Now it's now your turn. It's now your turn to reduce your selling price. It's now your turn to reduce the selling price. For example, if you will be charging me $140, let's say for example you will be charging me $140, so I will be very happy to purchase it from you, and definitely your profitability would be reduced, but your division will be continued. You will be in a survival position. Your division will continue to make the profit, but your profit will be reduced. Let's say for example this difference 25, this difference 25, see that I will be in a benefit because I am the buyer division, my bargaining position is high. If you are willing to give me at 140, yes or no? No, I will be going out. Simple as that. So another party will take the advantage and your division will be shut down. So if division if you want your division not to be shut down, you should reduce your price at $140, let's say for example. And similarly I will be having 55,000 profit. Your profitability would be reduced, but you will not be in a loss position. You will not be in a loss position, right? You will not be in a loss position. You will be in profit, but your profitability would be reduced. All right. So in order to retain the profit, in a group, my transfer price, you should reduce your transfer price. All right. Got this question? Hello, students. Please answer me in the chat box. Did you understand this concept? Did you understand this concept? Please type me in the question box. Okay. If you people want to note it down, you can note it down. Just giving you 1 minute window. Right, students, so this is the answer. Now students, I have the handouts are attached here for your relevance. I am now opening that handout. This is the final day and the session is about to end. I seriously want that you should be able to handle the questions. Just wait a minute. Yes, I want that you should be able to handle the question in the exams. This is the handout attached here. Portable garage company, June 2018. A very good question. Very, very good question, right? It's a very, very good question here. Portable garage company. Now, point to be noted is that it's a June 2018 question, portable garage company. This is the question. I'm not going to read it, but I'm just going to, this is a 20 marks question. This is a 20 marks question, right? This is a 20 mark question. And first of all, it is saying that under the current transfer pricing system, under a current transfer pricing system, prepare a profit statement showing the profit for each of the division and for the portable garage company PGC as a whole, the group as a whole, right? Your sale and cost, your sales and cost, your sale and cost figure should be split into external sales and interdivisional transfer. What is this saying? That this question is expressly saying that make the P&L. You should make the P&L, that's profit and loss. You should make the profit and loss account, prepare a profit statement, and your figure should be split into external sale and interdivisional sales where appropriate. It is saying that under a current transfer pricing system, and if I can help you out, that this is the division A, this is the division A, it's a selling division. They are charging to the external customers at 15 and selling price per adapter to division B, that is $13, right? So you need to prepare the profit statement. And secondly, assuming that new group purchasing policy will ensure the optimization of the group profits, calculate and discuss the number of adapters which division B should buy from division A, and what number of adapters should be sold to the external customers. There are 3 marks available for the calculation and 3 marks for the discussion. Number C, again calculate and discuss. When you will be going through this question, you will be able to understand after the end of this session. So you would be able in a better position to understand this question. And it's a very good question. I really like this question since it was examined in June 2018 and it's the past paper of ACCA. Now, what is the thing? Obviously, within this short time span, it cannot be solved. So I have already solved this answer here. I have already solved the answer here. Here the formulas are already applied. Formulas are already applied. All right. I've already solved it. This total group, and this file will be available to you. This file will be available to you in the WhatsApp group. There is a link, and it is also being shared here. First of all, do tell me, all of you, that are you all in the WhatsApp group? Are you all in the WhatsApp group? Please tell me. All right. It will be shared again in this question box. This is going to be shared again. One thing, when you will be in the WhatsApp group and go to the WhatsApp group, there is a description link. There is a description and there is a link of the Google Drive. Right now it is not yet uploaded. I will be uploaded in that Google Drive link. Okay. Now the second point is that this is the solved answer. I will be sharing this solved answer. All right. Now, because I'm just giving this question to you for your try first, and then you will be going through this answer. And here, the answer of word as well. The answer of theoretical part. This is the answer of theoretical part along with the explanation and whatever I used to write before my explanation. So you people would be able to handle this question, I'm sure. All right. And one more important thing, students. This is the very important thing, a very important document I have compiled for you even after the end of the session. Listen it very carefully because the session is going to end very soon. So first listen to me very carefully. ACCA does not publish all the MCQs. Few of the MCQs and case OTQs are being published in the examiner report. Now I am giving you the tips how to handle the exam. The very important message for all of you. But before going for this message, I've compiled this document for you people. You can have the benefit of it. This is my WhatsApp number as well. This is the March-June 2021 examiner report. September-December 2020 examiner report. July 2020 examiner report, and so on, and the list goes on. You people can see it. And there are mixture of the topics in form of MCQs. I have selected from the examiner report, and I advise to all of my students, you all are my students, those who are attending the session live, will be watching the video after uploading. All of you are my students. I am giving you the advice to all of you as well. Must read out, take out the time, must read out the examiner reports of at least previous 2 attempts, of the last 2 attempts. I have also shared with you people how to see the things for the ACCA practice platform. The resources are available. You can use those things. The practice question, the examiner specimen paper is available there. Go over there and practice. Now my exam tips, since it's a final day for this live session. One more important thing, must try these questions. And as far as the solutions are concerned of these MCQs, you probably would be needing the solution. So I will recommend you people go to the examiner report and you can see the solution, or I have the solved answers of these MCQs as well from my style, which I used to solve it. The annotation file, it can also be shared. Don't you people worry about it. It can be shared. You can check that Google Drive link constantly, or I will be uploading it to gather all the files. Now the important point is that exam tips. You are having 60% of your exam based or MCQ style of questions. Don't spend more than 1.5 hours on those things. And remember, attempt that question first at the question at which you are good. Do attempt those questions first. There are 15 OTQs, there are 3 case-based OTQs, there are 2 CRQs. You must need to attempt those things which you are good at. You must need to make sure. You must need to make sure that you complete the entire question. One more important thing, this is not a magic which a tutor can give you. This is not the capsule which I will be prescribing you to eat and you will be able to pass the exam. If you wish to pass the exam, you need to think accordingly. You need to prepare accordingly. There are many rumors that paper PM is a challenging paper considering its low pass rate in a skills level, and to some extent these rumors are correct to some extent, but it's not always the case. See, you have completed your knowledge module, you have completed your paper MA, FA, you have completed these things. If you are able to handle those papers, or if you have passed any skills module papers, that means there might be some capability in you. You can do it. I am saying that if you are sitting alone, many people will come to you that this paper is difficult, that paper is difficult, and all that stuff. The negativity is coming if you are welcoming it or not. But you should be in search for the positive vibes, for the positive feedbacks, for the positive things. Because when somebody is giving you the advice or somebody is giving you the message, it's actually setting a mindset. It's actually giving a mindset. I am your trainer. I'm teaching this paper since 2011 to 2011. I have experience for more than 10 years teaching this specific paper. I have seen a lot of students pass with good marks, scored in 80s as well, scored in 70s, got the positions as well. See, you can see these results as well. These are some recent results. You can see if these are the students, they are also human being. If they can do, you can also do. You are the same human being. All the things I found common in these students, they are not arguing with me that sir, this is difficult. They are in search for the solution. Go for the problem solving approach rather than going for the discussing for the problems. This will give you a mental stress. Don't go for it. Seriously, I'm your trainer. I am giving you the good vibes. You all are, you people are good. You can do, because everybody is giving you the negative vibes that you cannot, this is a you cannot no. Make your habit to listen that you can do, and in fact you should do. If you will do, if you will study, you will pass out the exam. Simple as that. The simple rule is that you can pass out the exam. All right, students, and considering this and considering that MCQ's handout, the solution would also be provided. It's not a big deal. I can attach all the things. So before going to end this session formally, please all of you, whoever are present, please leave a response, a feedback. Was this session helpful to some extent? See, that feedback is a fuel. I will not end without any feedback. Was it really helpful or not? No, give the honest response, honest feedback. Now that's good enough. That's good enough. I really wish you people, all of you, good luck for your exam. Do your best. Have a positive mindset. You can do it, but you should do the practice as well. All right, and don't listen to the negative arguments. See the positive arguments as well, because many of the students are passing the exam with good scores. See that results. Now, with all my best wishes, I am Haris Hanif, signing off from this webinar series. Have a good day. Take care. Bye bye.